MENA's 5-year energy investments registers a total of $879 billion. Which countries will have higher project numbers and therefore obviously bigger investments as well?
While higher projects numbers do not necessarily mean larger total investments, the largest countries in terms of energy projects investments are Saudi Arabia, which is the region's largest economy, UAE, Egypt, Iraq, and Oman. There are several planned projects that remain in the study phase in Iran that never reached FID that have been carrying on from last year's outlooks. These have been stalled given the macro conditions in the country. But in general sense, these are the largest countries in terms of investments in the region.
So the data on the report on planned projects until 2026 shows an almost even split between oil, gas, power, and petrochemical projects. However, it does give petrochemicals a much larger share than the 19% of committed projects it currently holds. Why is that?
Okay, the answer to this consists of two elements. First, there has been a strong drive in execution of mega projects in the chemical sector in the last 2 years, despite the COVID crisis and the credit crunch and everything. So we have seen the completion of several petrochemical mega projects in the region, particularly Al Zour in Kuwait, ERC's Mustorod in Egypt, and one of the Borouge trains in the UAE. Saudi Arabia also has witnessed the completion of petrochemical projects in the last 2 years. So this is one aspect, that some of the mega projects reached completion and are now operational. The other side is that the global petrochemicals industry at large is undergoing a process of rationalization and redesign. This has been happening since 2020 with the combined crisis disrupting the global trade and supply chains, and is being also exacerbated now by the enduring Russia-Ukraine conflict. So just as the industry was recovering during 2021, the Russia-Ukraine conflict has put the industry in the redesign phase again.
So another question is, would MAC projects predict that upstream spending will rise by 10% in 2022, while Rystad believes the recovery will take much longer? In your personal opinion, what would upstream spending look like in the next 5 years?
Okay, that's a tough question. 2022 is indeed a crossroads for global upstream spend. Yes, the world now is scrambling to boost oil and gas production everywhere. Yet the real quest is the sustainable return to pre-COVID expenditures in the upstream, not just a spike in upstream investments that will fall once the Russia-Ukraine issue is resolved. This is crucial first to compensate for the last 3 years that the global investments in upstream and in oil and gas capacity has been in record lows. And second, to continue building adequate resilience to assure future global energy security. The Saudi energy minister has been warning from further oil and gas shortages by the end of the decade if investments don't go back to 2018, 2019 levels.
Yes.
Now, a key determinant to this will be the outcomes of COP27 conference, which will hopefully set a more balanced approach to energy transition instead of the radical path that has proven to do more harm than good, as we can see countries switching back to coal. So instead of switching from oil to gas in power generation, they are switching back to coal, which is more polluting to the environment.
Yes, of course. Thank you for that. The report also mentions that LNG is advancing towards more commoditization, where long-term agreement will have shorter durations. Would that affect the industry like negatively or possibly positively, and also why?
Well, the commoditization of gas is definitely a positive thing in the general sense. Um, Increasing the commoditization of gas at large relieves the extra stress on crude oil as the only globally tradable energy commodity. And in turn, it helps contribute to climate targets. Gas is a leaner fuel with a lower carbon footprint.
Yes.
And the energy transition dedicates a low carbon future. This is a fact. It's not arguable. We need to move to a low carbon future. And what helps gas also play this role, or accelerates gas playing this role, is new low carbon and carbon neutral LNG standards, like the ones developed in 2021 by the International Group of LNG Importers. But generally, more commoditization will help put a lot of frozen projects back into execution through innovative and novel commercial agreements. On the other hand, the increased commoditization of gas will make it more prone to price volatilities down the line.
Yes.
So
Yes.
we're moving away from relatively stable long-term agreements to more shorter-term and spot trade, which is, of course, prone to cyclicality and volatilities, just as any other commodity.
Of course, of course. Thank you for sharing your opinion. With natural gas having a power generation share of around 70 to 75% across the MENA region by 2024, whereas the oil-fired power would drop to 20% by 2024. How do these predictions factor into the net zero target?
Natural gas in general is a cleaner fuel than oil. Gas power plants generate 60% less CO2 than oil, that you can even take up to 70% with energy efficiency and supercritical operations.
Yes.
So shifting to natural gas results in lower carbon emissions. And
Yes.
this is one big step towards your net zero carbon.
Yes.
Net zero carbon, however, will be achieved through a combination of shifting to leaner fuels like gas and other factors. Most importantly, like CCUS, carbon capture, utilization, and storage, that almost eliminates the carbon dioxide released into the atmosphere. In addition to developing carbon sinks that absorbs the residual carbon dioxide. Carbon sinks, in the general sense, mean just like planting trees or stopping actually deforestation, because we know the role of the trees and plantations generally in absorbing carbon dioxide from the atmosphere. In this aspect, the Middle East Green Initiative was set to increase the deforestation and develop carbon sinks throughout the region. And then the third venue, or one other venue, is carbon offsets and carbon credits. Carbon offsets and carbon credits allow you to trade and purchase unabatable carbon emissions. Unabatable in the sense that, okay, regardless of how you shift to gas and you implement carbon capture and storage, there will always be residual carbon emissions that it's impossible to capture or to prevent from going into the atmosphere. There you have your carbon credits and carbon trading. You can offset these carbon emissions through trading. So natural gas alone will get us maybe halfway, but the rest will have to come through other venues.
With decarbonization and efforts towards sustainability, how likely would global petrochemical companies invest in the MENA market, and why?
It is a fact that the MENA region has a cutting competitive advantage of being home to abundant, low cost, and low carbon footprint hydrocarbon resources.
Yes.
However, it's also undergoing a strong clean energy development drive to capitalize on its strong renewables potential. In the same time, the region continues to strongly develop its industrial sector with energy transition in mind. So not only investing in economic diversification or diversification of economic activity, but also in light of decarbonization, as we mentioned, carbon capture and storage, carbon trading exchanges, Tadawul in Saudi Arabia, the Saudi Stock Exchange, released or started the first carbon trading platform in the region this year. So this is a strong development in terms of decarbonization and the path to low carbon. There's also a strong localization activity for energy transition materials. The countries in the region envision localizing the production of EVs, electric vehicles, solar panels, and circular petrochemicals. So if you combine all these features, we have the resources, the renewables drive with the low carbon projects in place, and then you have also a strong industrialization drive. This is the winning mix for a petrochemicals industry, whether targeting exports to other regions or targeting the flourishing domestic markets.
Thank you so much for taking the time. And yeah, thank you for joining us today.
Thank you very much.